If you're thinking about buying or selling in the London property market and you want to know what's been happening of late, then definitely check out this video because I'm going to be highlighting all you need to know about what happened in the second quarter of 2022. Hi everyone, Ugo Renze here with Onyx Property Team and Keller Williams. As you know, I am a London-based property agent. I love helping clients buy and sell property throughout London. And obviously, if you are thinking about buying property, you need to kind of know what's happening. Is it a buyer's market? Is it a seller's market? Is this a good time to buy? Is it better off you wait and hold off? So you're going to need some statistics. So in this video, we're going to highlight what's happened in 2022 so far and hopefully give you some perspective on what you might expect for the rest of the year. So let's dive in. In terms of context, in the overall average UK property market, the average property price rose 13% to a record £294,845 in the year to June 2022, according to the national lender Halifax. This annual growth rate figure is the highest since 2004. Specifically, house prices jumped 1.8% in June this year, the 12th monthly price rise in a row, and the largest month-on-month increase in 5 years. Regionally, the largest annual increases in June were recorded in Northern Ireland, where the average property price increased by 15.2% to £187,833. This was followed by Wales, where the price now stands at £219,000, which was an increase of 14.3%. The Southwest was England's strongest performer, with average property prices for $308,000, a hike of 14.2% on the year. And how did London do? Well, London house prices on average increased 7.1%. While all of this actually might be a bit surprising, given that we've had so much turmoil in the market, whether it's been inflation and increased cost of living, the Russian war in Ukraine, there's just been so much uncertainty. But one of the things about the higher interest rates and everything, one of the interesting dynamics on that in terms of the population that higher interest rates and cost of living crisis impacts most is actually at the lowest end in the market. So they are the least able to buy and trade into the property market. So that's why we might still be seeing relatively strong demand, although we do have these other dynamics that are happening in the overall market. Also, we've seen a big shift in demand for larger properties, where the increase in property prices on average was 13.9% versus flats at only 7.6%. So definitely you're seeing through COVID, people want more space and larger homes. I've mentioned the differences across the regions, and as you can see from this chart, London is really at the bottom in terms of that annual increase of 7.1%, how it compares to the rest of the country. So the rest of the country has done remarkably well, and London has really been at the bottom relative to prices increasing over the last year. But I'm not sure that that's so surprising, given that we did see the biggest flight to space during the COVID crisis. Obviously, what London also faces is the fact of an affordability issue. This next chart shows you how London compares to the other areas of the country in terms of the ratio of house price relative to average earnings. At 9.7%, London is definitely the highest. Now, this data is through the first quarter of 2022. But these types of dynamics continue to play out. And it just means that London house prices relative to the average income is so much higher and less attainable. London also has the dynamic of international buyers, wealthy foreign nationals buying into the property market, which is why you see this level of distortion, because it's not really reliant as strongly on people's local economic situation. I also thought another interesting element that we could talk about a little bit was how has London done since Brexit? The Brexit vote was back in June of 2016, and according to This Money report, it's actually been able to compile some interesting statistics on how the last 7 years have gone relative to London, as well as comparison to another previous 7-year cycle. On average, asking prices within zones 1 and 3 in the capital have fallen 0.1% between June of 2016 and today, according to data from Rightmove. They've been dragged down heavily by London in Zone 1, which contains areas such as Kensington, Suffolk, and Westminster, where prices are down 10% or nearly £150,000. Meanwhile, the typical asking price outside of London has risen 28% in the same period, from $242,000 average price to $310,000 average price today. This chart here shows you the changes across the different zones in London, and where you've seen that Zone 1 had that 10% decline, and all the other zones as you got further out actually have benefited since the Brexit referendum. Again, if you want to go borough by borough, you can see that Westminster has fared the worst at number 10 in terms of its drop in average property prices since the Brexit vote. I think this next chart is really also very revealing because it actually compares. We had the 2008 financial crisis that then had a 7-year recovery period to 2016, and then we had Brexit, and we've had another 6 or 7 years of recovery since then. So how do those two, let's say, 7-year periods fare? This chart, I think, does a really good job showing how the recovery was so much stronger following the 2008 financial crisis versus where we are today. Being in real estate for over 10 years, I definitely know that real estate is a cyclical business. You don't have a straightforward, appreciation cycle forever. You do have corrections, but it has been a really kind of tough 6 or 7 years since the Brexit referendum. What hasn't helped is the series of tax changes and surcharges that have really gone after buy-to-let and international investors that London is heavily reliant on. In April 2016, then Chancellor George Osborne introduced a series of tax hits on buy-to-let investors. One was a 3% surcharge. This meant that on a £300,000 home, a typical UK buy-to-let investor will pay an additional £9,000 over what a owner-occupier would pay. There's also been a gradual phasing out of mortgage interest relief, which now means landlords will no longer be able to benefit fully from the interest payment that they pay on their mortgages. Furthermore, in April 2021, overseas investors were hit with an additional 2% stamp duty surcharge on all purchases. This means that an overseas investor buying a second property in the UK now pays an additional £15,000 on stamp duty. So I've thrown out a lot of stats, and definitely it paints a bit of a gloomy picture, and with further interest rate increase expected, we don't foresee that the London property market is going to really be rebounding anytime soon. Again, it might depend borough on borough where you're at, and also the type of property you're looking for. You're definitely seeing the best values in, say, 2 to 3 bedroom flats at the lower price points where there's quite a bit of choice. So if you are looking for that type of property, you should be able to definitely be achieving property prices below asking. If it's a property that's quite unique or has garden or has space, we're definitely going to see a stronger demand for those types of properties. Overall speaking, we're definitely anticipating things to remain relatively flat given further projected increases in interest rates, which are going to impact mortgage financing, which then makes buying a property more expensive, as well as relative uncertainty in the global economic situation, the supply chain issues, as well as the war in Ukraine. But if you are thinking about buying or selling in London, please don't hesitate to reach out. We can definitely have a complimentary conversation, talk about your goals and timing, and I can definitely share any information as I'm in the market every single day. I'll see you in the next video. Thanks so much for watching. Make sure to check out my other videos on my YouTube channel where I share great tips and information about the London property market and living in this fabulous city. So that's Ugo Arenze with Onyx Property Team and Keller Williams. Bye for now.